Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Carson here with a breakdown of the action in today's session and a look at how the week turned out. And we did end the week on a positive note. Seems like, Ed, we're so close to seeing pretty good market conditions if we can get above some key hurdles. But of course, we have some big earnings reports in the way next week that we got to get through first.
Yeah, it's sort of how we, all the news and the technicals are all coming together once again, and we'll see how that all works out. I want to take a look at three tech stocks that, because tech seem to be reviving: Etsy, ServiceNow, and Lam Research.
Okay, we'll get to those stocks, but first, let's take a look at the major indexes today. As mentioned, finishing the week with some strong gains. The NASDAQ up 2.7% by sessions close, so definitely tech's taking the lead here, followed by the S&P 500 with a gain of 1.9%. We had the Russell 2000 up 1.4%, and the Dow lagging, but still with a gain of 1% today. Here's a look at the S&P, but let's actually start with the NASDAQ, because could we finally be seeing this rotation back into technology, Ed, which had really been the big laggard in the 2022 bear market?
Yeah, and as recently as December 28th, it hit a closing low for the bear market. So it's not like it's been really marching higher in the last few months. But in 2023, it's definitely been leading. This week, it actually rose for the week, whereas all the other major indexes had losses. They all came off lows, don't get me wrong, but this one came back, had a small gain. I mean, the issue is you can see there's a long way to go, and it's still below the 200-day line. It's still below the December highs. So it's not per se leading the market, it's sort of leading in 2023. There's still a limited number of tech and growth stocks that are actually breaking out and setting up. I mean, there are some, and we'll look at some that are setting up, but it's a positive sign. I mean, interest rates are coming down. Maybe people are feeling more confident about a soft landing. Maybe some of the bad news is priced in. We'll see. Earnings season could change people's minds about whether or not that bad news has been priced in, but it's an encouraging sign. Obviously, we're in IBD, we often look at growth stocks, but hasn't been in favor, as you say, for a long time.
And now with the NASDAQ back above 11,000, if you look at the weekly, we do have a trend line here, roughly getting close to. I know the S&P has a more clear-cut trend line from the ultimate highs, but if we go to the monthly chart here, this one does look a little bit easier to see a trend line from those highs, Ed.
Yeah, and getting above that trend line would be really nice. I do think getting above last month's highs, which is right around the 200-day line, would be something where you'd really start feeling confident. I think really confident about the rally, because the S&P would almost surely be above it actually did get back above the 200-day line, and we'll get to that, but that would really start to signal some growth in areas, some real, some of the overhead resistance would have been lifted, getting to multi-month highs. So we're not there yet. We're not there yet.
We're not there yet. And a lot seems like it could hinge on how the earnings reports for those big tech companies start rolling in next week.
Yeah, absolutely. And then the Fed meeting will be the following week, along with tons of earnings. And so it'll be a busy couple of weeks, I think.
Yes. Okay, let's take a look at the S&P 500 on a weekly chart here, back above the 40-week line, the black line there, which is essentially the 200-day line, and the 10-week line. We're seeing those moving averages converge. We're also seeing the S&P right around that round number at 4,000, and this trend line that we like drawing from the highs, touching all those points, it's right back there, Ed. We have the higher lows, but we are not quite at the higher highs yet. It would take a trend line break and getting above those December highs, as you mentioned.
Yeah, it'd be nice to see that. In fact, it would be nice to see a little bit of a pause. If we could go to a daily, the market was forging, a lot of stocks are forging handles, and one reason because the pullback, that's the positive. And we just didn't want to see the pullback get too weak. We didn't want to start going towards the recent lows, and it looks like we aren't. So a little bit of sideways action, maybe for at least the first part of next week, then maybe see some more handles form. Then it would be ideal to see that move out, get above that, get above the December highs would be like that last big, big resistance, and then maybe we could see some, some more consistent gains. Again, those are a lot of maybes.
Yeah.
And we're not there. We've many times the S&P has gotten to the 200-day line, including this week,
Yeah.
and has faltered. So, getting there or even getting just above there isn't quite enough. You really want to see a decisive move above that level.
Mm-hmm. Well, we're keeping a close eye on the developing market conditions, and that would be the best case scenario, I think, Ed, that you've laid out there. But we also have to keep in mind with all of these catalysts, they could spur negative reactions. So I think that requires investors to continue to remain nimble.
And it could go both ways. I mean, let's say Microsoft has blowout earnings on Tuesday night and we all goes flying, and then a bunch of reports come out Wednesday night. So we could go back and forth. So just because we could end up going sideways, but just feel completely whipsawed over the next 2 weeks.
Yes, you're absolutely right. So that is a scenario that could play out as well. We'll just quickly look at the Dow and the Russell 2000. Here's a look at the Dow. Suffered quite a bit of damage, especially earlier in the week. It's trying to make up ground now, still below those shorter term moving averages and 34,000. Let's also take a look at IWM, which tracks the Russell 2000, moving off of its 200-day line after pulling back to that level this week, hitting resistance earlier in the week right at those November and December highs. So even though we did hit resistance on a lot of the major indexes in recent days, it was on the expected side because we were getting in overbought territory. And like you said, the silver lining is that we need stocks to pause for a little bit, digest those gains, especially those leading stocks, see if they can pause for a little bit and form new entries. So that way we're not chasing extended stocks and really focusing on those proper entry points.
Yeah, it sort of feels like this week was sort of like a roller coaster ride, where it's just that moment where it just starts getting nervous enough to go, whoa, and then it's like, yeah, and then everything works out okay. So fear quickly turns to exhilaration. So it wasn't so much fun on Thursday intraday, but we bounced. Yeah. So it was almost textbook perfect. You were expecting it, it came back, it found support. Right. So far, everything is working out the way you would sort of expect and hope.
Yeah, finally, right? There's so and now I'm gonna jinx it. But
I think I just did, so don't worry about it. I'll take care of that.
We're both kind of jinxing it because earlier in the week, that is what we were saying would be the ideal scenario to unfold. I mean, there's so many times that we're like, well, it would, best case scenario, this happens, but of course the market's not going to listen to us. Mm-hmm. Maybe it's finally listening to us, or maybe really what it is we've studied market history and we know what those ideal conditions are like from historical markets, especially you more than me, but having those pullbacks along an uptrend are normal, they are warranted, and they're needed. So we'll have to see where things go from here. And now just a quick look at the sector action this week. Here is XLI. Maybe let's actually look at some weekly charts here. So down 3.4% for the week. In the last quarter of the year, I think the industrial sector was looking pretty notable, a standout sector, but looks like we are seeing a bit of that rotation. Here's energy, XLE, up for the week. But lagging the indexes, up 0.7%. XME, the metals and mining stocks, down about 0.5% for the week after 2 solid weeks in a row. And then we have IGV. Let's check out tech and software, up 1.4% this week and coming right up to that 40-week line. Chip stocks had an interesting week this week, reversing higher here, and definitely some leaders underneath the surface ahead of earnings that we're going to see, especially from some of the chip equipment makers next week. But SMH up 0.7%. ARKK seeing participation from the beaten down stocks up 1.3%. Last week, also a pretty big week for ARC. Look at that, up 14%. So what is your take after going through all of these different ETFs, Ed? What should we be thinking about in terms of what areas are showing strength and what that means?
Well, I mean, growth is showing some strength. Tech is showing some strength, but it's not that bad elsewhere. The miners still look pretty good. The industrials, okay, that was a little weak, but they've had big runs, and some of that was like defensive stocks, like as opposed to all the industrials kind of per se. So there's actually seems to be some broad-based strength. This is what you want to see. I mean, we'll see if it continues but a lot of things seem to be falling into place.
Okay, and now for that look at 3 tech stocks, here is Etsy in the retail internet group. Taking a look at the daily chart here, a gain of 2.2% on Friday after a very orderly low volume pullback to the 21-day line and added to swing trader today.
Yeah, so it's working on a handle here, and it's the first, I guess it had already had a bottoming base, but this is the first base above the 200-day line. So that's nice to see. On a weekly basis, it does have a handle, I believe, unless it's strengthened. It's not huge given the depth of that base, but it has a handle. So this last week's high, this now offers a buy point in that regard. Another positive, this group is 33, and there's actually a lot of names that are doing well. Mercado Libre. You've seen even some of the Chinese e-commerce names.
Yeah, it looks like here with the top RS, those look like a lot of China-related stocks.
A lot of China-related names. There's also even things like Shopify and Amazon in the U.S. that are coming along. I'm not saying they're huge, but their strength there. You can see a lot of things in there. So reasons to be feeling better about Etsy as well.
Okay, and now let's take a look at LRCX. We mentioned semi-equipment stocks reporting earnings next week. LRCX, Lam Research, is one of them. So it's back above its moving averages and now properly stacked, seeing that 10-week line above the 40-week line. So progress there. And it looks like we do have a trend line here that arguably one could use to find an entry. But at this point, we got to wait till earnings are out of the way.
I think you got to wait. Yeah. I mean, because on a weekly, technically there's a handle as well that would work, but it's like down quarter of a point, quarter of a percentage point. So this is the bottoming base. Most of it's formed above the 200-day line, most of it above the 50-day line. So, this is one that, yeah, if things work out, this would be a stock that could go. So this is with Lam. There's ASML. There's KLA. There's Teradyne, and there's a few Intel, like Intel and some chip makers. So a lot going on. So these reports aren't just important for themselves, but really, are the chips going to do well? I mean, that would be something in that regard. And if the chips do well, that's a really positive sign for the NASDAQ and for the market rally overall.
Great points there, Ed. And let's also take a look at ServiceNow, a former leader. If we go on over to the weekly chart, 2020 had a nice move, a little bit of a run in part of 2021. We'll even go to a monthly there. You can see even earlier in the 2016 to 2018 time frame had a nice move as well. So is this coming back from the dead, Ed? Are we finally going to be able to talk about more software stocks? We are seeing some improvement in the right direction, a breakout from a bottoming base this week, but just getting above that 200-day line with earnings due next week.
Yeah, I mean, a bottoming base is below the 200-day line, though. If you were to treat this as a breakout, it is above the 200-day line. So it is there. It does have that trend line break. This is one of those where we're not thinking of it as CAN-SLIM IBD style, but you could see it as an aggressive entry, but there's earnings. Oh yeah, the volume has been very nice on this comeback. They've been fairly bullish. I think the CEO was at Davos and was saying, yeah, we don't see an IT spending slowdown. So this will be important. I don't know. The problem here is that if this has good report, it may be extended, and so won't be something you can buy. But it will be very important with this, and along with Microsoft, which is not quite the same. That's the day before, but this one is really the first highly valued software name. I mean, it's not as valued as much as it was because it's come down quite a bit. But if highly valued software names are going to make a run,
strong fundamentals,
fundamentals,
that translate over to the technical action.
Yeah, and what is their guidance going to be forward? Are they, it looks like pretty decent growth in 2023, all things considered. But can that continue? Will they say it? So yeah, so that could play out for a lot of these other names. I mean, there's a lot of other names that are trying to come up and do similar things, but aren't as strong. This appears to be one of the stronger of those big cloud names. So yeah, I think that this is one to watch, even if you have to let this one go, because this one, if it does well, may be gone.
Right. Yes, but for sure a step in the right direction, even if it does get some additional momentum on the earnings report. Nothing goes up forever. So then ideally, let's see it pause, hold the gains, form a new base, and then, hopefully that 50-day line will get above the 200-day line. And then that earlier stage base in the context of an uptrend could be a good time to start nibbling at some of these stocks that have taken some pretty long breaks. So we'll have to see. If the market listens to me, I don't know, Ed, but what should we be thinking about this weekend as we prepare for another week of trade, one in which we will start to see a lot of those earnings reports start rolling through?
Well, you should still have some patience, at least especially to start the week. And keep in mind, I know people get excited. It's fun. It's fun. Even to the extent I'm only lightly invested, it's fun to see these stocks go up. But it was like just a day ago, like yesterday morning, it was like, oh man, things aren't looking so good. So it wouldn't take much to get that down. So don't do a trend line from today's action and just go exponential and say, we're going to be up 400% for the year. So be patient. Watch to see how some of these earnings come in. Don't necessarily build up your exposure until some of that starts to play out, and see if we can get the moving averages clearly above the S&P clearly above the 200-day line. But definitely this weekend, work on your watch list, because there is more and more. A lot of the stuff that has been working is still doing well. A lot of growth names are coming up. So you really want to be prepared. Maybe everything is coming into place. Maybe it'll work out, maybe it won't. But if it does work out, you want to be ready to go.
Yes. Very well said there, Ed. I can't top that. All right, everyone. Thanks so much for tuning in. We'll be back with more next week, starting Monday morning with IBD Live. So be there or be square. Investors.com/IBD Live for all those details. We hope you have a great weekend, and we'll see you back here Monday.